introduce you to our Thursday guest, Matthew Cheslock from Virtu Financial. Hi, Matt. Thank you for joining me. Welcome to the show.
Sure. Thanks for having me. Happy New Year.
Thank you. Well, I'm sure everyone could agree that the biggest event in January is Donald Trump's inauguration, and many announcements have been made in favor of his supporters. Yesterday, Mike Pence said that their first initiative is to scrap Obamacare. So how are the markets reacting to that news?
You know, today we're seeing more that are focused on economic news, which is actually a good sign. So we're not just focused on what you mentioned, but there was actually a headline out today saying it was going to cost $350 billion to repeal Obamacare. So kind of interesting, the market, how it's digesting it. You know, we're seeing more action to the dollar today, and I think that's what's driving markets, which is good for the market. We're getting off the mundane topic of Donald Trump, and we're getting onto what's really should be driving this market.
Well, yesterday, if we want to stick with economic news, the Fed used the word uncertainty with trade policy to economic forecasts. So are you seeing uncertainty right now?
Yeah, you know, I think the Fed has always said that they're going to be data dependent. And if that's what they're going to be driving and data dependency, then they should look at each number independently and each month independently and not say that we're going to get 3 to 4 rate hikes going forward next year. If the economy doesn't warrant that, maybe we don't need it. You know, I think we're finally coming to the realization that Trump's policies won't be enacted overnight. You know, January 20th, you know, we won't have all this infrastructure spending and these tax cuts. It's going to take a little time, and I think the market's going to digest that now.
Another big release was auto sales, which wowed yesterday. Now, do you see any headwinds going into 2017 for this industry?
Well, it's funny. I mean, they blew away estimates. The estimates weren't even close. And today, you're seeing retail numbers that were so far below estimates. It's funny. So is all the spending going on a new car? So was that a one-time event? We were expecting a lot more out of the retailers after the holiday season. So these are conflicting signals, I think, as far as the retailer goes and as far as the economy. So it's going to bear watching going forward. I would have a hard time thinking that the auto industry could maintain those numbers from quarter to quarter. But that number was a blowout number yesterday for sure.
Yes, like you said, and not so much for retailers. Both Macy's and Kohl's cut their forecast because of the lousy holiday season. So have you changed your mind about any sectors?
No, and you know, we're seeing a small decline today, in the markets. I mean, the Nasdaq's up, technology is strong. So we're still seeing that trend that's been in place for the last 2 months of sector rotation. So out of retail into technology today. And that's why the market's down a little bit. The one thing that a lot of people are starting to focus on is the dollar. It broke through support level at 102, and it cratered down to mid 101s, and that was a massive move in the currency like that. But it's a little bit of profit taking. But I think the sector play is still in place. You'll see the rotation, and that's when you have to put your money to work.
Yes, I saw those wild swings in the currency markets. The dollar is now down 1% now to 115 to the yen. But Matthew, we have a lot to look forward to in the new year, and thank you so much for your insights.
Well, it's my pleasure. Thank you for having me.